In January, Arkansas announced it had landed its first super project, a $1.1 billion steel mill known as Big River Steel, headed by industry veteran John Carenti, to be located in Osceola, creating 525 jobs with an average salary of $75,000. Now, the deal triggered provisions of Amendment 82, which allows the state to float bonds to finance incentives and loans for the deal. $125 million in this instance has been proposed. Late last week, lawmakers released an executive summary from one of its independent consultants in the matter. The consultant's IHS Global Insights raised questions about the project. Joining me to talk business, maybe a little politics, is Grant Tennille. He is the Executive Director of the Arkansas Economic Development Commission. Thanks for being here.
Thanks for having me, Roby.
Had a little bit of a whirlwind week this past week.
It has been a busy week.
Let's begin with the IHS report. One of the provisions in there said that AEDC has to some extent overestimated the long-term net economic benefits of the incentives being considered. It adds that your agency maybe didn't fully consider some of the uncertainties or key assumptions. Right. I'm presuming you agree, disagree. Where do you stand on that assessment?
Overall, I think that the IHS report is fair and actually confirms our assessment of the project. If you read what they said that some of our predictions may have been rosy, as you put it, if everything goes badly.
Okay.
And as I've said from the very beginning of this project, and when I spent close to 6 hours in front of committees of the whole in both houses of the legislature, there's risk here. There is risk in any business endeavor. We feel as though we've spent a year understanding the risk and mitigating it as best we can. IHS went on to say that although there's risk, the state has put appropriate clawback and penalty provisions into its agreement. So what they're saying is, if everything goes badly in the marketplace, the mill is not likely to return everything it should to the state. But if the mill doesn't perform the way it's supposed to perform, then the state has the ability to ask for and receive its money back.
So you feel comfortable with the clawback provisions in there, that if things go sour, that you still got state protection on this?
We do.
Let's talk about one of the key assumptions for this independent assessment, one of the assessments that you guys have done. Delta Trust has done this for one of the investors in the project, the Arkansas Teacher Retirement System. Really kind of looks at the potential market size for the steel that Big River wants to produce. This report, this independent legislative report, actually says there is market out there for it.
It does.
You feel good about that?
I feel very good about that. And I think that it indicates that Big River's plan to target areas of the steel market that are growing, where there's demand, and where there's not as much supply in the United States, is going to provide them with real opportunity. I've said over and over and over again that what Big River is trying to do is look out into the future, where the marketplace is going, and put a project on the rails now that will be ready to meet that demand when it appears.
IHS also says, though, or suggests, at least in my interpretation of the executive summary, that if another major player were to enter that market, that it could be a, quote, zero-sum environment. Do you agree with that assessment?
I think that assessment is somewhat fair and somewhat accurate. I think that if Big River gets its plans announced and we approve them, the likelihood that somebody else is going to come along right after them and announce a plan to go after the same market is somewhat slim. But I think that ultimately what the IHS report says is that there is uncertainty in business. And I think we all knew that there was uncertainty in business when we started working on this project. I have an enormous amount of confidence in Mr. Carenti and in the Big River team, and a lot of that confidence is based on the fact that they've done this before, fairly recently. The mill that they built in Columbus, Mississippi is thriving. employing more people than they had promised it was going to employ, and producing more steel than they originally promised they would produce.
We're running short on time here. Let me ask you what happens if the legislature does not approve this bond issue, the $125 million bond issue. Does the deal die?
Yes.
So what happens if Arkansas legislators kill this super project? Do you think that it diminishes the potential for other projects to come to the state of Arkansas in the future? Or do you think people look at this and say they did their due diligence, they didn't feel it was a good deal, we took a pass?
Well, I think it largely depends on the outcome of some of these hearings that we have coming up. It's certainly understandable if, based on factual evidence and sound economic theory, that we take a pass. If we send the message to the world that we are intolerant of any risk at all, I don't think we'll get an opportunity to look at another project.
All right. He's Grant Tennille. He's the Executive Director of the Arkansas Economic Development Commission. Thank you for being here.
Thanks.
There'll be some joint economic development committees on Monday. So we'll see what happens with that. This story is likely to advance.